All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Today is January 27th, 2026. And good God, what a wild ride we saw yesterday in silver markets. I mean, we have seen some volatile days over the last few months, but nothing like we saw yesterday. When we last met, we were talking about silver breaking $110. And, I threw some caution in there. I say, hey, guys, be careful on leverage. We know it's going to correct at some point. We don't know how far. We don't know when it's going to start. Maybe take some profits on the way up, but sit back and enjoy the ride. And holy crap, what a ride it was. So we start around $110 with the morning show yesterday. As soon as the show wraps, silver goes on a tear, rips as high as $117.50. Here's looking at you, Jim Cramer. I hope you didn't sell grandma's silver. I mean, Jim Cramer, I think 2 hours before this rip started, Jim Cramer posted that he didn't like silver. You just almost knew this was coming, right? So we ripped from 110 to 117, and then a brutal, abrupt reversal starts in a span of about 3 hours. Silver sells off on no news, by the way. I saw nothing to drive this sudden drop that happened violently from $117 all the way down to $101. I was looking. If any of you guys know what drove this $16 decline, be sure and shout it out in the comments. I didn't see anything. I went, not for lack of effort in looking. The market just decided, okay, that's enough. $16 sell off. And then the market says, you know what? I think we've sold off enough. How about a little bounce off 100? Maybe make it 101. And here we are back up around $111, $112. And I mean, blink and you miss it. For all I know, since I hit the live button, we could be 115 or we could be 105. The market is just moving like crazy now. A $16 intraday swing. Good God. And so, look, we've got the short squeeze playing out. We've got the dollar debasement trade playing out. We know all these reasons why silver could go higher. We know, we've talked about these. But now we've got another factor that's really driving things here. The U.S. dollar, the DXY, is threatening to propel metals to the next leg higher here. Now, it doesn't mean this is definitely going to happen, but we've got the Dixie sitting right around 96 and change, which has been support. We've tested this level about 3 times since the summer. If we break down this level, the dollar from here, if the dollar goes a little bit lower, the dollar is going to go a lot a bit lower. We're going to look at the long-term charts at where that next support level is. And if the DXY breaks down from this current level here, then we're looking at rocket fuel for gold and silver because a weaker dollar is bullish for commodities. So what's making the dollar weaker here? Take your pick, guys. It's my Fed independence. The Fed's buying, or no, not the Fed. The Fed is printing money and buying Treasury bills. Fannie and Freddie are buying mortgage-backed securities. You got Greenland. You've got Japan. You've got tariffs and tacos. You've got, hey, maybe World War III paid for by money printing. Take your pick. Geopolitical risk is driving this weaker dollar here. A lot of it coming from Washington here. Now, here's the thing about this dollar short trade, and there's an article in Bloomberg to this effect this morning. Traders right now are paying the highest premium on record to bet against the dollar. So that's a little bit counter to this whole narrative of dollar heading lower and, gold and silver ripping higher here. When you see traders paying ridiculously high premiums, the highest on records, also they could all make the same trade. That is a crowded AF trade, and that also means it's ripe for a reversal or a correction. So, yes, we're sitting at this support, and we've hit this support several times now, and historically, the more you hit support, the weaker that support gets. That's the downside risk. The upside risk here is that the dollar is, the short bet is crowded. People are overpaying to make that bet, and if you see that trade go against them, you could see a rapid unwind of that. I don't really know which one is playing out. There's certainly no shortage of reasons to be short the dollar here. But this has just been wild, guys. And, I'm sitting here watching it. I've kind of been saying this over and over again. I don't know where metals stop. I don't know where they reverse. Maybe the top was yesterday. And maybe we're seeing a dead cat bounce right now on our way lower, or maybe that sell-off was all the bears had and onward and upward. I mean, I still stand by the fact that as soon as Jim Cramer tweeted that thing that he didn't like silver, that $120 became inevitable. So maybe we get that one today. Who knows? It's been a hell of a ride. Also going on this morning, guys, we've got a lot of earnings. Earnings season is in full swing, and starting tomorrow after the close, we will start with the big tech, the hyperscaler earnings. So the AI bubble will be all the rage from now till the end of the week. But as of this moment this morning, we've got United Health is down big on their earnings. They saw some revenue declines here. That stock is down high double digits here, dragging the whole Dow down with it. UNH is the biggest component of the Dow. We've also got some things that go boom. Raytheon earnings were pretty good. They're selling a lot of fighter jet engines, both for the F-35 and some of the older planes like the F-15 and the F-16. A lot of fighter engines. Again, the whole World War III thing, stuff that goes boom, doing pretty well here. Northrop Grumman also posted an earnings beat, but their guidance was viewed as a little cautious, maybe even a little disappointing. So that stock is down a little bit. Boeing, we've got the turnaround story at Boeing. Aircraft deliveries are up. They actually posted a profit. So has Mr. Ortberg righted the ship over at Boeing? Man, those headlines were awful last year, weren't they? One thing, Boeing sold off one of their subsidiaries called Digital Aviation Solutions. If you take away the proceeds of that sell-off, Boeing actually burned through cash and would have posted a loss without that sale. So maybe that's why Boeing stock is down a little bit this morning, although Boeing's up about 40% over the last year or so. So we are well into the turnaround story over at that name. General Motors posted earnings, doing really well, making fewer cars for richer people. We've got that K-shaped economy showing in GM here. They're making a lot fewer EVs. A lot of their base model sedans, they're not making so much of that, but they're selling a lot of things like the Cadillac Escalades, those big fat soccer mom SUVs. That stuff is selling. That stuff they're making because you've still got that upper K, an increasingly smaller population, is doing very well. And GM is just saying, everybody else, we don't care. Go to the used car market. And apparently the market is rewarding that because the stock is doing pretty well here. And by the way, meanwhile, we don't have any articles to this effect, but there have been a couple of stories over the last couple of days. Francesca's is a clothing outlet. They just filed for bankruptcy, closing all of their stores. Also, Fat Brands, the owner of Fat Burger and a couple of other like medium tier restaurant chains, they're going bankrupt too. People are eating out less, people buying less clothes. The lower K doing really poorly, but that upper K, you can see it in GM. They are doing just fantastic. We've got the mother of all trade deals, they're calling it, between EU and India, mostly because it looks like the press just really wants a story that they can rub in Donald Trump's face. I looked at the details of this trade deal between the EU and India. It looks like a great deal for India. Don't get me wrong. I think the Europeans are just eager to be like, see, we can make a deal with somebody else, even if it means flooding our country with visa labor and further suppressing the wages of the people we never really cared about to begin with. That's your leadership in Europe for you. But we'll talk about the details of that EU and India trade deal. The UK, this story's kind of wild. They're using private capital and off-balance sheet financing in order to increase their defense spending without spooking their bond market. And this is kind of shady. We're not talking about like private credit trying to get a data center built by some Ethereum mining shitco. We're talking about a G8 or G7. How many Gs are left? A G9, one of the G countries trying to finance their military. And they're using this shady Wall Street finance mechanism to do it. We'll talk about that one towards the end of the show. Apollo has zeroed out a $170 million private credit loan to an Amazon brand aggregator. More problems in private credit. And China is back to buying their soybeans from Brazil. Remember that trade deal or the trade truce? It was a deal. It wasn't a deal. Whatever you want to call it. Last fall, we had that truce with the Chinese, and they said they were going to buy 12 billion tons or 12 million tons of soybeans from the United States before the end of the year. It actually took them till the middle of January. They hit that number, and now they're done, and they're buying their soybeans from Brazil again. So American farmers are back in the crosshairs of the Chinese once again. Guys, we got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. And hey, don't forget that like button. And you guys, hit that subscribe button so you can come back tomorrow and have your coffee with the melon heads, because we do this one every single day. And right now, stocks are doing okay this morning. We've got the S&P is higher by 16 points ahead of the opening bell, about 0.25% to the upside. The Dow, meanwhile, is getting clobbered here, off by 344 points. Almost all of this is being driven by United Health stock. This is when UNH reported their earnings here around 6 a.m. Eastern time this morning, and the Dow has been heading south ever since. UNH is the heaviest component in the Dow index. And the NASDAQ, though, having a good morning, up about 0.2% or 160 points in the green for the tech-heavy NASDAQ. Again, guys, we got big tech earnings starting tomorrow after the bell. All eyes will be on that data center CapEx. And will investors continue to reward big tech for setting their own money on fire? I guess we'll just have to wait and see till the end of the week for that one. Looking over at the bond market this morning, we've got yields are a little bit higher on the long end of the curve. The 30-year yield is at 4.830%, higher by 2.5 points. The 10-year yield is at 4.230%. That's higher by 1.5 points. The 2-year is at 3.593, higher by just a fraction of a point. And the 1 month is unchanged at 3.693%. Looking over at Bitcoin this morning, we're pretty much right where we were this time yesterday, about $88,160 as priced on Coinbase. Not a lot happening in crypto these days. Looking over at the commodities board, it is a little quiet in commodities for a change. And by quiet, I mean we're only looking at plus or minus 5% swings in silver intraday. I mean, talk about a yawn here. Spot gold, $5,058. That's shown higher by $51 or about 1%. April COMEX gold futures are at $5,094, off by $28 or about 0.5%. Guys, one thing to keep in mind here, the big deviation between the gain in London and the loss in New York is these clocks reset at different times. The London market resets a few hours before the New York market, or vice versa. So when you see these big swings here, like spot silver up 5.25%, but COMEX silver down 5.3%, the two are pretty much moving in lockstep. It's just the counter zeroes out at a different time for New York versus London. So right now we've got spot silver at 109.16, shown as higher by $5 and change, while March COMEX futures are at 108.98, shown down $6.78. We are still looking at, okay, we are no longer in backwardation here, or swinging back and forth between a penny or two of backwardation, pretty much an even split between New York and London prices here. But silver at 108, currently heading lower, but off the lows from yesterday. We've got copper. By the way, I like the shiny. I don't know if I mentioned that. I almost skipped over that. Put a hex on the whole day if I do that. Jeez. All right, copper lower by 2.6%. Platinum is getting pummeled here, down by almost 9%, but still above $2,600 after hitting $2,800 yesterday. Palladium is along for the ride, down 10%, off by $200 for palladium here. Rough day for the metals. Crude oil is higher by 1.3%, though, 61.43 for March WTI futures. That's higher by about 80 cents this morning. All right, look at this chart. We are looking at 1 minute candles for silver, and it looks like the sell-off is resuming here. All right, first things first. When last we met, roughly 9 a.m. yesterday, we were right around here, and it was at like 6 a.m. yesterday that Jim Cramer tweets out that he doesn't like silver. Off to the races we go, up to $117. I think I've had enough. I think I'm going to sell off some $16 in a matter of 3 hours. Silver just got clobbered after that. Bottomed out around 101, actually just below $102. And then immediately reversed. Up we go. Is it a dead cat? I don't know. We rally as high as 113. We bounce around between 113 and 110. And of course, right now, just a couple of minutes ago, let's zoom in a little bit here. You can see it looks like the sell-off resumed just a few minutes ago here. Right now, silver heading lower in a hurry. We've sold off from 111 all the way down as low as 107 a couple of seconds ago. Guys, it's volatile AF. Like I mentioned the other day, just be real careful making levered bets here right now. I mean, if you don't know what you're doing, don't mess around with that stuff. Fortunes can be burned through in a second when you go out on leverage. Right now, $108. I mean, oh my God, silver has crashed all the way down to the price it was at 25 hours ago, 26 hours ago. Still over $100. It's been pretty crazy. All right, now the dollar, I think, is a big driver here. We're looking at the DXY at 96.62, below 97 for the first time in a while, off by 42 basis points again this morning here. Dollar looking a lot weaker. So let's talk about the DXY here. Bloomberg's got a lot to say about that this morning. Dollar traders are paying a record to bet on a deeper sell-off. All right, paying a record. That means the dollar short is a very crowded trade. That also means it's ripe for a reversal. Keep that in mind. Dollar traders are paying the most on record to bet on a deeper sell-off in the greenback as a volatile U.S. political landscape triggers a rush into bearish hedges. The premium for short-dated options that profit from a weaker U.S. currency has widened to the highest level since Bloomberg began compiling the data in 2011. It has never been this high. It's just we've only been looking since 2011. The bearish sentiment isn't confined to the front end. Investors are the most pessimistic on the dollar's long-term outlook since at least May of 2025. While the Bloomberg Dollar Spot Index fluctuated on Tuesday, its drop in the previous 3 days is the steepest since the U.S. tariff turbulence in April of last year. Should the losses resume, as options prices suggest, the currency could hit its weakest level in 4 years. Unpredictable U.S. politics is unambiguously dollar negative, said Jasper Fjordstedt. I don't know how's my Nordic pronunciation there, Mr. Jesper Fjordstedt. He's a senior analyst at Danske Bank. The development over the past weeks have pushed markets to embed a renewed political risk premium. What's that political risk? Take your pick, guys. Is it Iran? Is it Venezuela? Is it Greenland? Is it Europe? Is it China? All of the above. Volatile days. And a lot of people are short the dollar because of that. Another thing worth keeping an eye on, something we talked a lot about yesterday and last week, is the impact of what's going on in Japan here, in particular the yen. On top of the other concerns, the dollar's drop has been exacerbated by speculation that the U.S. administration might be willing to team up with Japanese monetary authorities in order to put a floor under the slumping yen. In other words, weaken the dollar to support the yen. The Bloomberg Dollar Spot Index was little changed in early New York trading on Tuesday. U.S. policy volatility is now debasing the dollar, said Luis Costa, head of emerging market strategy at Citi. This, coupled with potential government shutdowns, is prompting a market reshuffle into dollar shorts. Oh, yeah, another government shutdown. We got that one going for us, too. It's been almost a month since our last one. Yeah, we're due. Might as well. Let's take a look at the long-term chart of the DXY here, guys, and you can see where we are at right now, 96.6. I just want to zoom in a little bit. You can see this is now our third visit to this level since the summer. And again, when you hit support, every time you hit support, you weaken it a little bit. Shout out to Bob Coleman from Idaho Armored Vaults who gave me that one. And you can also see this level was something of resistance back in November of 2021 through February, March of 2022. You can see we were right around this level, and typically resistance becomes support, vice versa. So right now we're right here around this 96.2 level where we hit our head back in 2021 and early 2022. If we break below this level on the chart, then the next support level is around 89 on the DXY. And if the DXY breaks below this level and goes to 89, guys, that will be rocket fuel for gold and silver. I don't know if we're going to break through this. Again, this is a very crowded trade, this short dollar trade. People are paying way too much in premium to bet against the dollar. Everybody's got the same idea in their head. That is conditions for a sharp reversal. But if this level breaks, if all those traders are right, we are going sharply lower. Gold and silver go sharply higher on that trade. And another interesting thing to keep an eye on is the Swiss Franc, USD CHF. This isn't something we typically look at, but the interesting thing here is the Swiss Franc is another one of those safe haven assets. It's typically viewed in the same pile as gold or U.S. Treasuries, someplace people go for safety during difficult times. And the dollar and the U.S. bond market has not really been functioning as a safe haven asset. Gold has been the chief beneficiary of that, but the Swiss franc has as well. Now, we're looking at dollar candles right now, and you can see the Swiss franc has broken through this support level that we had pretty much over the same time frame since the last summer. We broke through it just a couple of days ago. Last week, while gold was ripping, while everybody had their panties in a bunch over Greenland and everybody was conveniently overlooking Japan, which is what they should have been focused on, we saw the Swiss franc strengthen suddenly. This chart moving lower is the Swiss franc getting stronger. And I want to switch this chart now over to weekly candles. And I just want to show you guys what happens here when we zoom way out on the chart. The last time the Swiss franc was this strong was 2011. And of course, 2011, that's the last time silver went ripping like this. But really, that was just the weakening of the dollar post-GFC. So we've already had this USD CHF chart has broken below the support that the Dixie chart is currently on. So this tells me the dollar may lose that support at 96 is what I'm saying. I think the DXY actually is headed to that 89 level because the Swiss franc has already broken below support here. And again, by broken below support, I mean the Swiss franc has strengthened, sending the chart below its support level. All right, enough Forex talk for the morning, shall we? Let's talk about earnings. And there have been a lot of earnings today, starting with United Health. Stock plummets 12%. I think those are rookie numbers. I think we're looking at a bigger drop here. After earnings, why soft revenue isn't the only problem. United Health reported weaker than expected quarterly revenue on Tuesday, sending shares even lower after they took a blow from the Trump administration's plan to keep Medicare Advantage rates roughly flat. Poor United Health. They didn't even get a raise this year. I tell you, some guys just can't catch a break, huh? The stock tumbled 12% to $309 ahead of the opening bell. Shares were already about 8% down before UNH's earnings report. The Centers for Medicare and Medicaid Services proposed late Monday for payments to private Medicare Advantage plans to rise by just 0.09% on average in 2027, well below what analysts had been expecting. Things went from bad to worse following the results. UNH reported an adjusted profit of $2.11 a share as revenue climbed 12% from a year ago to $113.2 billion. Analysts had been expecting earnings of $2.10 a share from revenue of $113.8. So we got a little bit of a revenue miss, and the guidance doesn't look so hot either. The company's revenue guidance for 2026 also looked weak. UNH is forecasting adjusted earnings of more than $17.75 a share on revenue of more than $439 billion. Wall Street was looking for $17.74 a share and revenue of $454 billion. So that announcement from Medicare about Medicare Advantage premiums or reimbursements not going up as much as expected, combined with the weak forecast. Look at United Health stock down 16.5%, currently trading $293.80, off by almost $58 this morning. I don't shed any tears for United Health, though. Remember, guys, this company is currently engaged in all kinds of fraud investigations centered around those Medicare Advantage plans as well. Meanwhile, we got a couple of defense names reporting today. Raytheon posts higher quarterly sales on strong engine demand and aircraft repairs. Aerospace defense giant RTX posted a higher fourth quarter revenue and profit on Tuesday, driven by a rise in sales for its engines and a strong appetite for commercial aircraft maintenance and repair services. Mentioning commercial aircraft as well, I guess we'll have to wait for those Boeing earnings to see that. RTX was helped by increased sales for its F-135 turbofan engine, which powers all variants of Lockheed Martin's F-35, as well as continued maintenance demand for its decades-old F-100 engine. Now, the F-100 engine, that's the engine that goes in the twin-engine F-15 and the single-engine F-16. So, look, they're selling a lot of F-35 engines because the world is gearing up for World War III. A lot of maintenance demand for the older planes, which are being stretched past their lifetime. Again, see also build up to World War III. In August, the company's engine business, Pratt & Whitney, bagged a $2.8 billion contract for 141 F-35 engines. It also received $1.6 billion in F-135 sustainment contracts in December. The unit also makes engines for Airbus's A320neo jets. They posted a 25% rise in adjusted sales during the fourth quarter. However, earlier this month, President Trump signed an executive order linking share buybacks, dividends, and executive compensation to weapons delivery schedules a move that could add uncertainty around future capital returns. He singled out Raytheon, warning the unit's government contracts could be at risk if it failed to curb stock buybacks. And Raytheon has paid a lot of dividends and bought back a lot of stock, and they have not spent a lot of money on increasing defense production, which is something the president wants to see. So we'll see if they say something about that on their earnings call. For now, Raytheon is having a pretty good morning, up about 3.1%, trading just over $200, up by about $6 this morning. And over the last year, Raytheon up almost 55% higher in the last year. It's a good time for things that go boom. Northrop Grumman also reporting this morning, posts higher quarterly profit as geopolitical uncertainty fuels demand. A lot of that geopolitical uncertainty going around this morning. Aerospace and defense supplier Northrop Grumman posted higher fourth quarter profits and revenue on Tuesday, helped by strong sales in its aeronautics business amid heightened geopolitical uncertainty. Robust demand for arms fueled by escalating tensions in the Middle East and the ongoing Russia-Ukraine conflict has boosted sales for Northrop Grumman and other defense contractors. Global tensions have also been elevated as policies pursued by President Trump, including, Greenland, Venezuela. We know all about that. We don't need to rehash all that. However, its 2026 sales forecast of $43.5 billion to $44 billion fell shy of Wall Street estimates for $44.25 billion per LSEG compiled data. So it looks like Wall Street did not like the guidance from Northrop Grumman, even though the earnings were pretty good. That stock's down about 1.7% ahead of the opening bell, trading just under $650. Although over the last year, this one up 33%. You could argue it was due for a bit of a sell-off here. And we spoke a lot about aircraft engines, commercial and defense. Boeing just posted their earnings. Boeing cash and sales rise after most jet deliveries since 2018. Boeing has had a rough couple of years, but it looks like they are in the process of a multi-year turnaround. Boeing generated cash for a second straight quarter and reported a 57% bump in sales during the final 3 months of 2025 as the U.S. plane maker continues its recovery and benefits from surging orders. You'll see in a second here how that cash they generated for the second straight quarter, that's a little deceptive. It's not quite that good over at Boeing. Free cash flow was $375 million in the fourth quarter, more than analysts expected, while revenue rose to $23.95 billion. Earnings were boosted by a $9.6 billion gain tied to the sale of Boeing's Jeppesen digital aviation subsidiary last year. Under Ortberg, Boeing is emerging from a half-decade of operational and quality meltdowns. The company's raising output of its 737 and 787 Dreamliner jets, and it almost tripled aircraft deliveries in the final quarter. The company's total backlog has surged to a record $682 billion as customers have used aircraft purchases to improve their standing with the White House and U.S. President Trump. The Arlington, Virginia-based manufacturer reported adjusted earnings per share of $9.92 in the fourth quarter, the highest quarterly figure in a decade or more. Closing the digital aviation solution sale in November increased earnings by $11.83 a share in the period, Boeing said in a statement. Excluding that gain, Boeing's loss per share was worse than the 46-cent loss analysts predicted, according to data compiled by Bloomberg. So that paragraph has the important details there, guys. Yeah, $9.92 in earnings per share. That was helped by $11.83 a share from the sales of that digital aviation solution. So 9.92 subtract 11.83. The company lost $1.91 a share if you don't count that piece of themselves that they just sold off. The market was expecting a loss of 46 cents a share. So it was actually a little bit worse of a quarter than analysts were expected. Although with Boeing, there's so much negativity surrounding this company because of all the safety issues that they had and the whistleblower thing from a few years ago. The market was largely overlooking that. Stocks down 1.8% this morning, $243.90, give or take. But look at what this has done over the last year, up 41% since this time a year ago. So Boeing in the process of turning things around. But again, those numbers that they just reported, they were more than manipulated by the sale of that one division. Take that away. They're still losing money. Still a long way to go with Boeing. But they're delivering more planes, and the backlog is looking a lot better than it used to. Another old U.S. name, old U.S. industrial giant General Motors sees profit growing $2 billion this year and plans buybacks. General Motors expects profit to grow as much as $2 billion this year and plans to return more of that to shareholders with a higher dividend and buybacks fueled by demand for its highest margin vehicles. Adjusted earnings before interest and taxes this year will range from $13 to $15 billion, which is higher than last year's $12.7 billion, the company said Tuesday in a statement that also detailed fourth quarter results. GM made $251 a share in the latest quarter, a result that easily beat Wall Street analyst consensus for $228 a share. The company's guidance underscores how much sales of pricey new models and a permissive regulatory environment is helping lift profit growth. Even with the U.S. new car market expected to shrink slightly this year and a tariff hit on some imported vehicles and parts, the automaker projects making enough money to boost payments to shareholders. GM's new guidance rests on selling more of its largest trucks and SUVs, such as its GMC Sierra and Cadillac Escalade, and fewer electric vehicles. Legacy automakers are benefiting from President Trump's efforts to water down Biden-era fuel economy rules, allowing them to sell more gas guzzlers without paying fines or having to buy EV credits from the likes of Tesla. The Detroit-based manufacturer also said it authorized $6 billion in share buybacks and an increase in its quarterly dividend by 3 cents to 18 cents a share. GM has bought back more than $20 billion in shares over the past several years, which has helped push the stock up to all-time highs. So GM is doing really well, selling fewer cars to richer people. Everybody else, good luck in the used car market. GM stock up 4.9%, now 5% and change. The opening bell has rung. $83 and change for General Motors stock, up by more than $3.50 this morning. You can see the upper K is doing very well. Big high-end Sierra trucks and Escalades are selling, and, well, not a lot of Chevy Novas on the road these days. What can we say? Meanwhile, the EU and India clinch the mother of all deals in rebuff to Trump. Honestly, this deal kind of sucks for the EU the more I looked at it this morning. But, hey, it is a deal nonetheless. The European Union and India concluded a free trade agreement. When we get to the numbers, you tell me if this looks like free trade or not. But they concluded a free trade agreement after almost 2 decades of negotiations, part of an effort to deepen economic ties that has gained momentum due to the Trump administration's aggressive tariff policies. We have concluded the mother of all deals, European Commission President Ursula von der Leyen said Tuesday in a social media post. The head of the EU executive, who was in New Delhi to mark the moment with European Council President Antonio Costa, added that the accord created a free trade zone of 2 billion people, with both sides set to benefit. Indian Prime Minister Narendra Modi hailed the agreement as a means of strengthening India's manufacturing and services sectors while boosting investor confidence in Asia's third largest economy. All right, so let's talk about some of the deals here. And it's India's most ambitious trade pact to date. New Delhi has agreed to allow up to 250,000 European-made vehicles to enter the country at preferential duty rates. You'll notice they're saying preferential duty rates. They're calling this a free trade agreement, but if there are preferential duty rates, that means there's still tariffs on those cars. I thought this was free trade. Doesn't free trade usually mean no tariffs? But I digress. A quota more than 6 times larger than other recent deals. All right, so they're lowering tariffs, but they still have them. The agreement would give India a competitive edge in exporting labor-intensive goods hit hard by Trump's tariffs, including apparel, gems, jewelry, and footwear. Brussels has also offered binding commitments on student mobility and post-study visas. In other words, flooding the EU with cheap Indian labor. See also what they've done to big tech in Silicon Valley here in the States with H-1B visas. So good luck, European wage earners, competing with that one. India has kept its politically sensitive dairy sector out of the deal. All right, so here's the deal. India has cut tariffs on key EU products. Cars used to have 110% tariffs in India. Now they are 10% on the first 250,000 vehicles. So you still have to pay 10% tariffs, and they're calling it free trade. But hey, 10%, a lot better than 110%, right? That's gone from an embargo to just cost of doing business. Wines went from 150% to 20% or 30%. Spirits were 150%. Now they're 40%. 40% tariffs on booze. Way to rake them over the coals there, Ursula. You really shook them down, didn't you? 50% on tariffs for beer, down from 110%. The Germans should like that one. Processed food, the tariffs went to zero. Aircraft and spacecraft, they went to zero. Machinery, they went to zero. All right. So this free trade deal results in 40 to 50% tariffs on liquor, 10% tariffs on cars. Now, what did India get for this? And look at this. The EU has slashed their tariffs to zero for Indian gems, jewelry, textiles, apparels, leather, chemicals, base metals, and furniture. The Indians left 40 to 50% tariffs on drinks coming in from Europe, which is one of their biggest exports. And in exchange, the EU lowers tariffs on Indian goods to nothing. They just really wanted a deal with the Indians to make President Trump look bad. And so, once again, the European Union shows their shit negotiators. Honestly, good deal for India. Congratulations, Prime Minister Modi. You did really good on this one. I don't know what to tell the average wage earner in the EU, though, because European labor markets are about to be flooded with work visas from India. And we see in Silicon Valley how quick companies are to replace American labor with H-1B visas when they can. They'll do the same thing in the EU now. Meanwhile, the UK looks to private capital to help fill defense spending gap. This is pretty crazy. We're not talking about like shitco private credit deals. We're talking about the European or the United Kingdom here. A widening defense spending gap is pushing the UK to rethink how it funds key contracts. The Ministry of Defense is drawing up options to help finance its defense investment plan, which has been delayed due to the £28 billion or $38 billion funding shortfall. Officials are considering rolling out a form of public-private partnership under which government money is used to leverage in private funds, according to people familiar with the matter who spoke on condition of anonymity behind closed doors. They're also looking at other ways to leverage more private capital and offset the immediate need for public spending, they said. What does that mean? PPPs, or public-private partnerships, are long-term contracts between the government and private sectors used to overcome shortages in upfront capital, in which companies take on initial costs and recover their outlay over time via annual payments. The contracts have proven controversial in the past because of questions over the value for their money and the quality of the delivered projects, an arrangement used to keep debt off the government's balance sheet. And that's the key there. The European government has a funding crisis that is ongoing. The bond market has been throwing a fit about it. So they're using off-balance sheet financing deals to add more debt to meet their defense spending requirements without spooking the gilt market. The government in Whitehall has not used this most common form, so-called private finance initiatives, since 2018, when their use was discontinued by the Chancellor of the Exchequer, Philip Hammond, following the collapse of construction firm Carillion. Did I pronounce that right? PLC. So the EU government is using off-balance sheet financing to pay for the army. What's the worst thing that could happen? Don't answer that. And we're a little pressed for time, guys, so I can't spend a lot of time on this. All I can tell you is Apollo just took a big loss on a private credit loan. They zeroed out this asset-backed loan that had previously been called safe. It's a $170 million loss for Apollo Global Management and their clients. This was from an Amazon brand aggregator called Perch. They basically bought these companies that sell on Amazon. They paid for it with debt, and now that debt is just completely wiped out. $170 million loss. And the other thing is, this happened a long time ago. I think they said this happened last year. They mentioned it somewhere. We're short on time, guys. This happened a long time ago. Apollo's just telling us about it now. See also earlier commentary yesterday about how the marks in private credit and private equity, we just basically have to take their word about it. And they've shown us time and time again that they're effing liars, and they won't tell us the truth about what this stuff is worth. See also this loan that went bad a long time ago. Now we find out that it's worth nothing. Gotta love private credit. But don't worry, guys. It's being parked in your 401k, so it's going to be great. All that stuff is, yeah. Congratulations, you own it. Hey, Travis from Real Estate Mindset says, where is Armando? Oh, Armando, he's calling you out. Travis and Armando have these dueling super chats that they like to play out in my comments here for some reason. Hey, I'm not knocking it. Thank you, Travis, for supporting the channel. You bonkers SOB, you sir. Check out Real Estate Mindset when you guys have a chance. We've got RPM 84. What's going on, RPM? He says, silver diamond pattern at 15-minute chart. Bullish, don't you worry. I haven't quite gotten down to like studying the 15-minute charts for patterns here. I try not to trade intraday like that. To be honest with you guys, I don't know. I mean, silver was in a steep sell-off the last time I looked at it. What is it right now? Okay, we've bounced. We sold off as low as 107.71. Now we're back up to 109.92. Guys, get used to volatility. RPM, if you're intraday swing trading this thing, number one, be careful. Number two, you're probably doing all right because the intraday swings have been ridiculous these last couple of weeks. It's not going to stay like this forever, guys. And again, I have to wonder, I've been wondering this out loud in a couple places. What is breaking somewhere else? Silver going up in a straight line, gold going up in a straight line. For every action, an equal and opposite reaction. What is happening that we can't see? That's what worries me. Thank you very much, RPM, for supporting the channel. Sir, Nacho Man 3086 says, gotta love Cramer. Always do the opposite. The inverse Cramer pattern strikes again. He didn't like silver, and silver rallied like $15 within a few hours of that. Although it was followed by a sell-off, but we remain higher than we were when Cramer tweeted that one out. Yep, booyah, Ski Daddy. He strikes again. Thank you, Nacho Man, for supporting the channel, sir. The Pasta Man is back, says, big fat Escalade. I am not a soccer mom. Tell me you drive an Escalade without actually telling me, Pasta Man. Well, yeah, when I hear Escalades, I think two things. I think soccer moms and I think gangsters. You're not a soccer mom. Is there something else you want to tell me, Pasta Man? Are you secretly a gangster? I don't know. Thank you, Pasta Man, for supporting the channel. Sorry if I offended you with the soccer mom comment. James Richter says, Jack, is silver option expiration today? Not that I know of, but I don't follow options expiration in the comics that much. Let's see. When is silver options expiration? Silver options expiration the last Friday, 2 months. Okay, January 27th. As a matter of fact, yes. Today is silver options expiration. Huh. How about that? Thank you very much, James Richter. And historically, we see price slams on options expiration day, don't we? Or maybe the slam was yesterday. Maybe everybody covered their shorts and got out, covered their shorts at $101. Maybe a few people liquidated their short positions yesterday. Yeah, pretty wild stuff, guys. Thank you very much, James Richter. I did not know today was options expiration in the COMEX, that is. Hunt and Cover, thank you, sir, says, heard there was a party at NSF. Is this good for the cover charge? Sorry, Hunt and Cover, you're not on the list. Sorry. Let's see. What do the girls look like that you bought with you? All right, you can come in. Hunt and Cover always travels with such attractive young ladies. Sure, why not? I'd make a shit bouncer. I'd let everybody in the club. Sorry, guys. I have high hopes and low standards. Everybody come on in. Hunt and Cover, thank you, sir, for supporting the channel. Yep, there's a party going on here. Population us. 4Ps, what's going on? He says, if and when our money resets, I think that's the start of the CBDC. You could argue the Genius Act allowed the CBDC already. Stable coins are on the up and up these days. Think it will be welcomed by many who don't understand the system and will be desperate. Well, stable coins is not quite a central bank digital currency because the central bank doesn't control it and the government doesn't yet have control over its use. But a CBDC ultimately is programmable money, and that's what people need to worry about. If they can program your money, then they can say what you can spend it on. They can make it disappear if you don't spend it in a certain time frame. If they see that you're spending it on things that they don't like or that they deem socially irresponsible, they can take it from you. Who knows what? When you give them that much control over the money, it's foolish to think they won't use it. All right. These people are power grubbing a-holes that will take anything they can possibly take. Central bank digital currencies are not a good idea, which is why the Europeans just love the idea so much, of course. Yeah, I agree. I think many people will welcome it probably because they'll be given stimmies in order to adopt it. Oh yeah, here's your free wallet. Here's $50 worth of Fed bucks. Enjoy it. Thank you, 4Ps, for supporting the channel, sir. Ryan Scanlon 2151. Thank you for being a Melonhead member for 1 month. Says, ever look into I Post Alone? Bet it's linked to fraud. No, I haven't. Never heard of that one before. It's going on the homework chart though. I Post Alone with nobody else. When I post alone, I prefer to be by myself. No, I never heard of that one, but I will look into it, sir. Thank you, Ryan, for supporting the channel and for the tips, sir. Go GM, says Dan Hedin. Dan, as you may know, has a unique knowledge of the vehicle industry. He was formerly a guest there. Thank you, Dan, for supporting the channel. Correct me if I'm wrong, don't you own a lot of GM, Dan? Probably doing all right this morning, if that is the case. Also, Dan done all right on his uranium picks as well as his silver miners and his buckets of copper. I know you like that copper. Thank you, Dan, for supporting the channel, sir. Espresso Beanies 8930 says, former Meta's AI lead calls out slop fest and still no price discovery. Yeah, I can't remember the guy's name off the top of my head, but he quit. It was a couple of weeks ago. He quit. He's going to go start his own thing. I mean, when they tell you, guy, like, you're like the OG of artificial intelligence. This guy has been like at the forefront of research for decades. All of a sudden, they hire Alexander Wang, who's this like 19-year-old asshole who sells himself as this AI visionary when really his only talent is not paying people in sweatshop labor conditions over at, what was the name of his company? Scale AI. All they did was label pictures to teach drones how to kill people and blow up buses. And then he didn't pay people for it. And Meta's like, oh, yeah, we'll hire that company because Meta's just the most god-awful company that ever existed. And then they tell this guy who's done this groundbreaking research for decades, yeah, you answer to this 19-year-old guy now. And he said, F you, I'm out. And after he left, he basically said what Ilya Sutskever said, that this grand experiment in large language models has failed. We have not achieved artificial general intelligence. We won't achieve artificial generative intelligence. We need to stop burning money on GPUs and start doing research again. Well, hey, big tech earnings just around the corner. I'm sure they're going to be great. Thank you, Espresso Beanies, for supporting the channel, sir. And thank you to Mr. Arbitrage, the arbitrager, gifted 5 Nobody Special Finance memberships. Thank you for supporting the channel, Arbitrage. And thank you very much. Say thank you, everybody who got one of those memberships to Arbitrage. And just a reminder, guys, you get a free super chat every month with that membership, so feel free to use that. I will read and respond to your questions live on the air. And Frank 300ZX says, Jack, what does Janet think of the EU-India trade deal? Oh, you queuing up my Janet. Secretary Yellen, what are your thoughts on the EU trade deal? Well, Jack, I noticed absent from the trade deal was anything having to do with hallucinogenic mushrooms, which you know that's kind of my bag. So unless the tariffs on hallucinogenic psychedelics, if you will, out of India, unless those tariffs have gone to zero, I am not interested. All right. There's a party at Janet's house, and everybody is invited. Yeah. All right, Janet. You know what you do in your own time? That's your call. She loves those shrooms over at Janet. Thank you very much, Frank300ZX, for supporting the channel. Thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate all the super chats, everybody, as well as you magnanimous Melonheads on YouTube, Patreon, and Buy Me a Coffee. Thank you guys so much for supporting the channel. Links are down in the description should you feel so inclined. Don't forget that like button and that subscribe button on the way out. It's going to be another wild day in silver markets. Have fun. Be safe. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.